Preparing. Hold on to your hats. We're almost there. All right, and we are streaming. So let me go ahead. I'll just post this in there. You guys can watch it on YouTube, but just so that Dakota has it as well. Um, and now I can go ahead and share my screen. For some reason, I can't share my screen and then start the stream, so I keep forgetting that and having to remember. Okay, so I'm gonna do today's session a little bit different, and kind of do it more structured through the slides. And I'm curious your feedback. Let me know if you like kind of doing this more structured, and one topic at a time as we get to the end here, or if you prefer kind of more top of mind jumping around. I'm just trying to find a good structure for these Monday, Friday sessions that give you the absolute most value. I mean, that's my goal here, is to just provide the most valuable in a half hour or 40 minutes that we get together a couple times a week to have a good blend of, market insight, actionable trade ideas, answering questions, covering some of the services and what's going on there, and blending that all together. So any feedback you have is always valuable, and I take it very seriously. So again, this week we're going to go with a little more structured approach, and let me know what you think. So starting off, let's look at the sectors overview. So this is just where we sit currently in our sectors. Now, a couple things that are interesting, I think, to point out here. Number one is that this XLY, which is consumer discretion, we've been talking about how this is getting beaten up, is kind of in this neutral area right now. So year to date, it was doing really well. Now kind of underperforming, the lowest performing of all of the sectors. On the 5-day, obviously below that due to the weakness as of late. And then we've actually dropped below the 50-day as well on the XLY, which is not something I would have thought I would have been saying 2 weeks ago, but has moved all the way below the 50-day. And so the timing for this looks to be pretty good from a seasonal perspective. And then the current is, kind of neutral. So XLY is an interesting one to keep in mind. I'm not confident enough just to start buying it up because it's a little bit oversold, but I do think that it's one to keep an eye on. Now, another one that I think is really interesting is technology, because technology we always think of as the overbought sector, but it's really not. It's actually pretty neutral across the board right now. A lot of that has to do with Apple pulling back aggressively this year. That's why it's only up about 2.8%, 6% this year. But the timing for technology is good from a seasonal perspective. So interesting to note there that XLK is one that we could start seeing some buying pressure come again. And then there's some really funny ones like XLC that's extremely overbought, timing not good, seasonally not great, year to date overperforming, 50-day overperforming. The reason that's kind of funny is because XLC and XLK used to be the same sector. So we would almost consider, I mean, they used to be literally the same sector, and we kind of think of them as the same sector. And yet you have poor timing with extremely overbought, and you have good timing with neutral. So seeing a very serious divergence there. Now, again, one of the reasons is if you want to kind of really overgeneralize what's going on here, well, look at Apple driving XLK, and then look at Meta driving XLC. Meta, incredibly overperforming. Apple, very underperforming. And so that's where you see some of the divergence there. A couple other things to point out, not worth, making a big stink about right now, but just very interesting to see basic materials being a top performer. Seeing energy finally be kind of in this top range above the 50-day for the first time in a long time, potentially picking up some steam here. I think that one is interesting. And then, of course, healthcare, which has gone from, being overbought to underbought to overbought, back and forth, a great snapback sector that we've been talking about that is actually now back in this overbought here, according to the overall trend. Although I think in reality, with the recent down pressure, XLB is not overbought if you're looking at it from a true technical standpoint. So just a couple things to highlight there. Now, what I find more interesting about the overview here is what we've actually seen this week. And what we've really seen is that we have a much more congested sector performance than we've seen in months. I mean, really going back probably 5 months. We see most of the sectors within a couple percent. So this is XLV. This is health, like I just said, got beat up. It's only down about 0.6%. This is, by the way, this is going from Monday. So the market open is right here to current, which is right here. So XLV is about negative 0.7%. And then we have XLE up about 2%. So the entire spread here is about 2.7%, meaning energy up 2%, XLV negative 0.7. So the entire across every sector is only spanning about a 2.7% range. I find that very interesting because what we've been seeing for months and months here is big, big gaps. Remember when we saw that basic materials were up 6% in 1 week and then health was down like 2% that week? So we had an 8% spread. Other times we've had technology be up 3 to 4%, energy down 3 to 4%. Again, 6, 7, 8% spreads. What we're seeing right now is a much tighter, much more congested performance across our sectors. Now, to me, this is a cautiously bullish sign. I say cautiously because I still think, as we'll talk about here in a moment, that we could see this break either way. But right now, we're seeing things kind of line up more consistently. We're not seeing crazy bounce back and forth and snapbacks this week. Again, this is only 5 days. Don't throw all your eggs in this basket. But I think it's cautiously optimistic because it shows the market is more aligned. And normally when you get the market more aligned and you get the market moving to all-time highs, which we're very close to, you see solid continuation because you don't have one sector going crazy, yanking the market to all-time highs. You're actually seeing the market move together at a wider base toward all-time highs. So cautiously optimistic sign here in my view, especially when you see that XLF, which has actually been a great sector, is near the bottom. Like I said, XLY, historically a great sector near the bottom. So we're not seeing like energy and utilities drag the market down. We're actually seeing those in the top half, and we're seeing historically strong sectors in the bottom half that might very well catch up to the median. So for me, I really like that we could be seeing more consistency and balance across the entire market, and that's something to keep an eye on. See if this breaks right back out next week, because right now the sectors are squeezed. That means they could turn up together, or it means they could break right back apart. That's what I want to see over the weekend and Tuesday at the market open. If there's one thing for you guys to check on Tuesday, write this down: sector separation. Okay, when the market opens on Tuesday morning, check the sector separation. See if it's breaking back apart or if it's moving in lockstep together. That's definitely something that you want to watch for. Okay, next up, we've got NASDAQ. This is the QQQ, probably my most traded instrument. And you can see here, we are very close to all-time highs, literally pennies away. Now, like I mentioned last week, an interesting thing is that NASDAQ is already above the previous high, whereas the S&P, this is the all-time high, which we'll see in a second. So the all-time high is just a couple, it's January. Here, the high is not January, it's November. And so we're looking to try to break that high on the NASDAQ. So again, if you're looking for the major differences in what we're seeing in the NASDAQ versus the SPY, the major difference is the inauguration run was stronger on the SPY. It actually made all-time highs. The QQQ did not. However, the February run is stronger on the QQQ. Okay, so just to put it in perspective, in 2024, NASDAQ was stronger. Inauguration run, SPY was stronger. February run, NASDAQ is stronger. So we're getting that ebb and flow, that back and forth. And I think if you're going to pick a horse, meaning an index horse right now, you got to go with QQQ if it breaks the all-time highs here and see if that rallies up several more percent. So major decision point here. Obviously, we're at the very top. If it breaks, we could see a nice big run here. Obviously, tons of downside now as we're at the very top of this range. Of course, that's why the two-way options are nice right now, because you have both of those potentials. SPY, again, similar. Like I said, the previous high on NASDAQ, which we just looked at, which is the all-time high, is all the way back here. SPY broke that, so our high is here. Started consolidating, made one break. We got one break left to go. If it breaks that, obviously in a very similar position as the NASDAQ, but I like the NASDAQ better because of relative strength as of late is stronger. Okay. So again, I like QQQ from a momentum standpoint, but both are in a very similar situation of a major decision point here, where we could see a rejection of those highs, or we could see a break and run, which again I'm cautiously optimistic on. I still am kind of holding to my original projection going all the way back to November that Q1 was going to be a bullish quarter, and then we would see some correction later into 2025. So still kind of thinking that that could be how it plays out and what I'm cautiously optimistic about. All right. With that being the case, let's just look at a quick overview of the strategies that we have going on. Obviously, as I look here in the chat and I see questions, I don't know what everyone's a member of offhand, but just as a quick highlight here, two-way options on the board with our trade today. Congratulations to all the new members of two-way options. Was a little dicey there starting off, and then even a little more dicey just a couple days ago, but thankfully got the breakout, held the line today. So it's nice to see two-way options get on the board with an automatic win there. Overnight options continues just to be red hot. Little irony there. I put red hot in green text just so you know that it's not losing. When I say red, I don't mean losing. I mean red hot as in winning. I believe we're 15 for 17 on overnight options, which is actually even better than it sounds because our average winner has gone up. So to be 15 for 17 with a bigger average win has been awesome. Super excited about overnight options. We talked about the volatility and how it would play into that. Really, really good to see it work exactly as we expected. Automated options, winner this week, winner last week, and new trade today. How many of you will be in there with me live in less than an hour for our next automated options live trade room? Shoot me a yes in the chat. Okay. If you are not, yes, 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 yes. Good. Okay. If you are in this room and you are not going to be live with me in automated options, I will give you the plug at the end of the session. Okay. So if you hang tight, I'll just tell you, here's how it works. Here's what we're going to do. I'll give you the link to join if you want to join. We'll do that at the end of today's session so that no one needs to miss out on our live trade. But it looks like most of you will be in for it, and I can't wait to see you all there. So winner last 2 weeks, new trade today. Profit pairs, my funniest strategy right now. Profit pairs, I expected in this volatility to have a lower win rate and bigger wins. We have got the exact opposite. It is the funniest thing with profit pairs. We have actually got a crazy high win rate, a higher win rate than I've ever had in profit pairs, and smaller wins because the volatility is snapping back and forth. And whenever we get up 20% before it returns to the average, kind of median, I've just been taking profits, 18%, 26%, 31%. So profit pairs has been very funny, kind of the opposite that I expected in profit pairs. Win rate has been shooting through the roof, highest win rate I've ever had in profit pairs, but the wins have been smaller instead of bigger. So just kind of turning that on its head. And by the way, I really think as you guys understand strategies and kind of combine that together, that's going to be something that you become more familiar with is understanding how that win rate and kind of average risk reward correlates. Phil says, I forgot jump trades. Well, I didn't forget jump trades. I just didn't have any highlights this week because we didn't have any winners this week on jump trades. We do have Apple that's doing great, but I didn't close out any winners this week on jump trades, so it didn't make my highlights list, unfortunately for jump trades. But hopefully Apple hits the target here and we have a nice 100+% win. But thank you, Phil, for making me feel bad about no, I'm just kidding. Jump trades, yeah, didn't have a winner this week that we closed out, so it didn't make our highlights list, but hopefully we'll make next week's highlight list. And then shout out to my HQ All Access members. Big stuff coming. Like I shared recently, I didn't plan on having an All Access group at any point in 2024 or even 2025. I assumed that we would launch it in 2026 once I had some really critical mass. But we went ahead and launched it because we had people asking for it. And thank you guys for just kind of hanging tight, being patient as it's been a little bit of kind of just wait and see mode for me, what I'm able to post and put together. But I've got some big stuff coming for HQ. I'm most excited about the HQ right now because I've got a lot of stuff in the pipeline there. Some cool bonus classes and strategies. Hopefully planning a group all access meeting in Florida with me, Graham, and a couple of the other guys that we all do together for my all access members and do some live trading there. I've got a whole bunch of indicators that I'm putting together that I'm going to kind of, that they're not like full strategies. They're not services that I'm ever going to launch, just tools that I can all kind of mash together and give you guys. So all of that will be in HQ, and I'm putting, I'm putting those resources together as we speak. So thank you again. Super big shout out to the HQ members, because you took a leap of faith and trusted me. And I am, still kind of catching up on all the stuff that I want to put in that membership. So working on that. Cool. Let me move on. Stocks I like. Okay, first up, we have the juggernaut stocks that I like. These are the ones that pretty much make my list every week. So for the all access live meeting, I'm assuming the fall, but I'm going to try to connect with the team and move it up a little bit if we can. Again, I'm still kind of playing catch up here with that all access membership and putting all the pieces together that I would have loved to really take my time and roll out. But I'm trying to kind of play catch up and get all of that put together for you guys and make it, as much as I possibly can packed into that. My goal, no offense to all of my other colleagues and the great traders, but my goal is that you guys think that the Nate All Access is way more valuable than anywhere else. So that's what I'm shooting for. It's just going to take me some time here to make that list. So juggernaut stocks that I like, they all make the list almost every week. Meta, Walmart, Apple, Progressive. These are the stocks that I pretty much hold all the time, that I do in the investing 2.0 approach, where I'm rolling over new positions on them all the time. Apple, I'm really excited about right now, because even after like 5 weeks of ugly movement, already back profitable, just kind of cycling in those trades. And listen, if Apple doesn't go up and it doesn't make all-time highs, I'm willing to take a beating on it, because I think you got to trade the best stocks on the planet. And if they don't work out, that's okay. You'll take some beatings there, but over time, if I'm going to trust a stock, I'm going to trust Apple. Progressive, again, probably ugly for 2 weeks. It happened to get started during one of those pullbacks, but been an absolute beast lately. I think I've made more money on Progressive in the last 6 weeks than I made on anything else. So love that. Walmart just been an absolute monster since we started talking about it in 2023. Love that stock. And then Meta, I just think, is the best of the Mag 7 right now. I don't think you can compete with Meta right now. And it's got $1 trillion of market cap to make up between it and other stocks. So still have a lot of potential upside there in Meta as well. Okay, Phil, you mentioned PLTR. Well, that's on my next slide here. High volatility stocks that I really like. PLTR is on the list. Coin is on the list. Coin I'm going to double dip into as well. Coin, I can't believe, is at $280 a share right now after one of the most mega earnings beat you'll ever see in your life. It's down 6% on the day, which is just wild. But I still love it. I think after that beat and the fact that it has a potential momentum catalyst with Bitcoin attached to it, and again, just the company itself, I'm still holding it. Like I said, I would have loved for a nice 10-15% earnings pop, which I feel like it deserves. And pay me 50 grand in the course of a couple of days. Yes, I would have liked that, but didn't get that. Instead, we got a 6% beat to the negative side. And, I'll hold it now, and I'm fine holding it. It's a high volatility stock that I like. PLTR, might be the next NVIDIA, might already be NVIDIA from a performance standpoint. I don't know. But for now, the momentum is unreal, and I like PLTR. And then Fortinet, I think, is a great one to keep in mind. So just another high volatility stock that has the potential to make really nice moves that we can take advantage. And anytime it picks up momentum, I think is worth looking at. So I don't really post these anywhere except for week to week here. So really just here is where I'm kind of posting them. Obviously, these also represent some of the stocks that I'm actively trading in my services, but this is really where I kind of update folks on the ones that I'm watching. Okay, now I mentioned Coin being kind of a double dip stock here today. What do I mean by that? Well, I mean that it's also my long weekend trade. So this is the weekend trade. Keep an eye on this. This is important. This is a high risk trade. It just had a great earnings and then got beat up by 6%. I think that it has all the potential in the world to make a move. I like Bitcoin on long weekends like we have this weekend. Bitcoin is on average moves up over long weekends. Coin obviously will typically use Bitcoin as a tailwind to move up itself. So this is a trade that I like. The trade is a debit spread targeting 282.50 by next Friday. Okay, so that's like a 2% move, which, obviously Coin makes 2% moves every darn day. So we're not asking for a whole lot. You get into this trade at least about an hour ago. You could have got in for about 95 cents here on the debit spread per contract. Okay. Target here would be $2 credit. And the gain there is 110% gain if you make that trade. So if we hit our target, it'll be about 110% on Coin, asking for a very, very, very small move relative to Coin's potential. Now, if you wanted to get really crazy, I mean, if you wanted to turn high risk into turbo crazy risk, you could target the earnings high about $310 and really go crazy, make about 500% if you hit that trade. But I like this nice, easy 2% move here on Coin. Again, Coin moves 2% every day, and we're giving it about a week. So how do you put that on? Well, pretty straightforward here. Go to trade. Here's Coin. Like I said, trading about 278 to target 280, 280, 250. Has moved up a little bit here. So we moved up about 10 cents on this since about an hour ago when I found it. So I'll go ahead and adjust this to $1. Okay, sorry, let me just sprout my screen a little bit here. For about $1, see if it comes back to that. And then you're going to be at exactly 100% if you get filled at $1. So bouncing around a little bit here. We'll see if that could get filled. Just came back down to 278 on the dot. So theoretically should fill right around $1, $1.05. And then once you get that trade in, then you set up a good till canceled limit there for Coin. Very straightforward as far as debit spreads are concerned. If you're not familiar with debit spreads, no worries. We'll go through it a couple more times here when we jump back to the trade. And of course, if you really want to learn how to trade debit spreads, just join Automated Options today. You'll get the full masterclass and everything on how to do debit spreads, and you'll be a pro in no time if you're an Automated Options member. Okay, but before we jump back into the brokerage and talk about some other debit spreads and things like that, we do have to talk about the lesson of the week. Because you guys seem to really love the idea of me sharing my hardship and my pain of losing over 20 grand in the last 2 days. I got about 100 thumbs up in 2 minutes flat whenever I threw that out there. So I got to give the people what they want and talk about me taking a beating here on some of those trades. So here, I think, is the lesson of the week. If you want to write this down, I think it's worth writing down, even though it's common sense and kind of a funny, paradox. I think it's actually very important. So when trading, it's very likely that many unlikely things will happen. Okay, so to me, this is the lesson of the week. If you're going to trade, you really have to separate what's statistically, likely and all of that, versus what's impossible. Okay. So if you are trading based on max risk, defined risk, and you know what's possible to lose, that's one side of the coin. If you're trading like I often do when I'm trading direct stocks and not options, which is more open-ended risk, you have to separate what's likely versus what's impossible and then expect some unlikely things to happen. What I did a very poor job of this week was not fully being aware of how many unlikely scenarios could happen to me all at the same time. Okay, so it's not like I was unaware that, the stock could drop 20%, or in TDD's case, 33%, which was insane. It's not like I was unaware that that could happen. Obviously, I was aware. I was prepared to take the risk. What I did that was really poor management on my part this week is I stacked up too many of those events at the same time. And when they all happened at the same time, I took one of my worst beatings that I've taken in 2 years over the last 48 hours. And so that's what I want to talk about. So This is my lovely stretch of earnings trades here. And you can see my P&L is down about $19,000 on these set of trades. The reason that that loss is so ugly is because so many things happened at the same time. Okay, so again, for me, there's no big deal in taking on some extra risk on an earnings play. I don't mind that. What I really didn't anticipate, and I should have done a much better job of anticipating, is one trade moved down 26%, about 3 times the expected move. Okay. Then TTD moved 33% at its peak, about 3 times the expected move. And both of them didn't move 3 times the expected move in my favor. They moved 3 times the expected move against me. On top of that, Reddit underperformed, beat earnings and went down 5%. Okay, not exactly normal. That's unlikely. Beat earnings, moved down 5%. On top of that, Roku missed earnings 10 times in a row. So I went ahead and took a bearish put on that. Had its first beat in 10 dang quarters. On top of that, Frog, which was expected to underperform, overperformed. I took a trade on that. It's up 6%, which means my debit spread on that is down. Granted, only about $800 on that one. Only about 240 on Roku. These were small moves. TTD was a big move. INFA was a big move. And so what I really did an improper job of was preparing myself and my account that, of course, all of these could happen at the same time. You know, normally I'll trade over the course of time. You get the law of averages, couple work out, couple down. So even on a down day, you're kind of down the split difference between these. Instead, I'm down on all of them. And they sure stack up ugly to about $19,000 on a relatively small account, by the way, because I took these in my high risk trading account. So I basically blew out all my profits and then some over the first 30 days. Actually, let me show you. Hold on. You can scroll down. Here you go. So my overall P&L on this active account went from positive 16 grand to negative 3,500 in the course of 48 hours. So this is the lesson, right? I mean, listen, just let me be clear. The fact that I'm down $3,500 year to date on this particular account, not really a big deal, obviously. It's not the point here. The point is that when you are trading, and especially if you're doing higher risk stuff like I'm doing all the time in this particular account, you have to be a lot more disciplined than I was this week about stacking up the risk on unlikely scenarios in short periods of time. What I should have done is taken all the same trades. I don't think I made any mistakes on any of these trades. Okay. I don't think I made any mistakes. Sometimes the market goes the wrong way. I'm fine with every single trade I took. But my net liquidity jumping up to $78,000 on a relatively small account for a high risk account across all of those trades, when my average, position sizing year to date, where I've been up 16 grand, was like 20 grand or something, was just way out of whack for the size account and where I was at P&L. Now, why was that? Why did I have $78,000 of risk open on a relatively small account? Because I just assumed that the law of averages, I'd win a couple, I'd lose a couple, even the quote unquote worst case in my mind was, a $7,000 loss or an $8,000 loss. I wasn't being fully honest that all 5 unlikely scenarios could happen on the same day. And I think that for me is the real lesson. It's an obvious lesson. It's something that I know. It's something that I would have taught you guys in a risk management class, a month ago or a year ago. It's common sense, but in practice, I kind of traded it as a law of averages instead of trading the brutal reality that, no, Nate, you have to trade as if all 5 unlikely scenarios will happen at once and scale this 78K down of risk down to like an average one position of risk of maybe 20K, 25K. If I did that, then I'm down 6K, 5K, and I'm totally fine. I'm still up, really great for the year, all of that kind of stuff. So, again, to me, the lesson of the week is when you're trading, unlikely scenarios will be very likely to happen all the time. Basic common sense stuff, basic risk management stuff, all that kind of thing that I would teach you that everyone probably already knows. However, doing it in practice and assuming, hey, over six positions, the law of averages, I'll be fine. You can't get willy-nilly with that. I did this month. I was kind of on a heater, which, I'm sure as you guys are very comfortable with, or very familiar with. When you're on a heater, sometimes you don't maybe step back and make the best risk management decisions. And so, yeah, I just wanted to kind of give you a, hey, learn from my mistakes lesson today, and say, even on trading decisions where you don't make any mistakes, you still have to boil it down into a proper risk defined situation. And for me, the easiest way to do that is based on average position sizing, right? Because again, if you do this and I boil down my trading into one normal day of risk, then my risk is going to be 20 to 25K, not 78K. And then my worst case scenario here is much smaller. Okay, so again, there's a little bit of a nuanced situation, but what I'm trying to say is I took these trades as if they would balance out to a normal 25K risk, because of course some are going to win, some are going to lose. Instead, they all lost. And so I realized the whole 78 risk. That was, a really undisciplined way to approach that. Again, if you asked me ahead of time, are you risking 78K? I would have said, oh yeah, of course. Yeah, I'm risking 78K, but you can't get away with that in trading. Eventually, all five unlikely scenarios will happen at once, and you will take the brunt of it. So anyway, that's the lesson today. Hopefully learn from my mistakes instead of your own. Okay. Let me jump. Let me go back to the chat here because there are a couple questions. Yes, I will show you. I will show you the trade on coin here in a second. No, they were not all spreads. Most of these were buying the actual shares. TTD bought shares, Reddit bought shares, Infa bought shares, Roku and Frog were spreads. Plan for TTD. I'm going to hold TTD because it has a great recovery history on earnings. So I'm going to hold it for a little while and see if it recovers. If it doesn't recover, I'll take the loss here, by the end of the month or early March. I'm just going to give it a chance to see if if I can get back and cut that loss in half or so, just with a kind of a time stop, like in the first week of March. Yeah, Jennifer, that's what happens sometimes. And what normally will happen is kind of, it'll happen on the back of a hot streak, at least for me. If you look at my biggest drawdown, they normally happen on the back of a hot streak. Why? Because you get comfortable, you get confident. You don't, again, I'm not talking about making mistakes. I'm not talking about like doing dumb stuff like, oh, I'm just going to take a gamble trade with 50 grand. I'm talking about making totally fine decisions like all of these trades, which I'm totally fine with, but being careless in how you stack them together. To me, that I think that's the risk you have to be more concerned about. If you're just doing crazy trades, well, then you need to stop that. That's bad. But I'm not talking about that. I'm talking about just kind of getting careless in the risk stacking up. All right, let me go to the actual trade. So the trade today is on coin. Again, high risk weekend trade. Lower than 50-50 chance of winning it, just to be super clear on this one. And what we're doing is we're taking this 280, 282 spread on coin. What that means is that in the next 7 days, coin needs to get up above 282.50. That's about a 2% move on coin. Easy for coin to make. Makes that kind of move almost every day. We need it to be made in the bullish direction, of course. So how do you take that trade? Well, most brokers, you can just choose vertical. Automatically sets up the trade for you, and you'll see it right here. And then you'll buy it as a debit spread. So when you buy a vertical as a debit spread, it means you're going to pay a debit, and then you're going to try to sell it for a credit for more than you paid for it. Why not 277.50, 280? Someone asked. You just won't get nearly as good a risk to reward. So I'm trading it as a directional move where I want it to move in my favor. That's why I call it a high risk trade. If you trade it as the 277.50, 280, totally fine. You can absolutely trade it. Just going to move your risk to reward down a bit. So you might get, if you go for a $2 target here, you might get about a 60% gain instead of a 100% gain. Now, why do I prefer the 100% gain, higher risk? Well, for me, because if coin's going to make a big move over the weekend, it's probably going to move more than 2% anyway. So for me, if I'm going to take a high risk kind of weekend trade anyway, I prefer to go ahead and lean into the move and go out of the money here to about 2%. I think that's a comfortable range for it to go. Now, once you get the trade on, we're going to use a target on it. Okay, so the way we're going to do it, here's the trade. It filled down here. You can see it here. What I'm going to do is I'm going to put a target on the trade. How do I do that? I set it up as a closing order as soon as I'm filled on the position. Okay, so I right click, create closing order. I go to sell this vertical back. Remember, we're always selling the vertical back on a debit spread because we bought the vertical to open. Okay, now to sell it back, what you're going to do is you're going to choose the credit that you want to sell it back for. In this case, I'm suggesting a $2 credit. So you punch $2 in there. All right, that's your credit that you're going for. Then you switch this time in force from day till good till canceled. That means that the order is going to go ahead and sit in your brokerage over the next 7 days. And if coin makes that move, then you're going to get paid off with a nice 100% gain. If you got filled for $1, you're going to get paid off with a nice 100% gain on that $2 credit. Then you just confirm and send that order off. Click send. And now that order is going to be sitting up here in your brokerage account waiting to be filled. All right, so that is the entire trade. Yes, here, let me put it in the chat. I'll grab it here from you. Okay, that is now in the chat for y'all. Why are we trading coin? Okay, so the reason that I like coin is because it just absolutely hammered, crushed, spectacularly blasted its earnings. I mean, just crushed it exactly like I expected and is down 6% today. So I think that coin has a better than not chance after filling the initial gap that it had 2 days ago to rebound to at least a reasonable midpoint between maybe the over anticipation of earnings yesterday and where it's now corrected to. So from that standpoint, I like coin to have a rebound. The other thing that I like about coin is that it typically correlates quite well with Bitcoin. I mean, not today because we're getting an earnings reaction, but typically it correlates quite well with Bitcoin, and Bitcoin tends to do well over long weekends, which we're about to face. So if Bitcoin does move up significantly over the long weekend, it's very likely that Coinbase will mirror that. And so it will act as a tailwind if that's the case, and we could see coin easily pop a couple percent. All right. Now, I only have 15 minutes before our automated options class begins, and I did promise that I would cover how to join automated options for everyone here. So I do want to do that and give you guys just a couple minutes to join before we get going. So let me do that really quick here with automated options so everyone gets a chance to do that. I just got to actually find. Yes, I am still holding Tesla and Ford. I'm still holding Walmart and Costco. I'm still holding several of those long-term pairs all the way out into 2026 and 2027. I'm also still holding TLT, which we're starting to get a little bit of a lift off, which is nice for that. Let me go ahead and just pull up automated options. I'm running out of time here because I took too long to get through this. No, automated options and overnight options are different. So overnight options, which is also fantastic, by the way, has been on a hot streak, but that's every day, Monday through Thursday. So that's a daily overnight trade that we take. Whereas overnight options is kind of my core income strategy that, is a 2-week trade, kind of my core structure that I've been using now for a couple years in our live tracking and has been absolutely awesome. So let me pull that up real quick. Sorry, it's taking me a minute here to find Automated options. Boom. Share my screen. There it is. Okay, so this is automated options. Automated options gives you, of course, our class today, where we're going to do a live trade. But not only that, lots of other good stuff in here. So, what automated option gives you? Every single week that we have a trigger on automated options, you will get my exact personal trade alert. Now, this is my flagship system because it is the best balance of trading opportunities that I think you'll ever find. It's mechanical, it's high probability, you still get really nice gains, it's consistent, it filters out bad market conditions. It's really just a fantastic, fundamental, structurally sound trade, which is why it was my most profitable thing in 2024, even though it didn't have the highest win rate or even the highest profit factor necessarily. For me, it was my highest profit active trading strategy because I just rely on it so much. And so what you get is every single Friday, right around the same time, 2:30 to 3 p.m., you get my automated options trade. It's a trade that lasts 2 weeks. And the way that it works is amazing because we set up a target as soon as we get filled on the trade. And then at any point over the next 2 weeks, if we get a nice positive move in the market, we hit that target. We make a nice 50% return on automated options on average. And so I target about $1,250 every single week using automated options. So every week I'm going for 1,250 more, 1,250 more, 1,250 more, just kind of stacking up that weekly income. And it's, again, just a phenomenal strategy. It kind of checks all the boxes of consistent, high win rate, but you're not going for 5 or 10% income. You're going for nice, juicy 50% returns week in and week out. And we're starting our class here in about 12 minutes. So if you want to join automated options, go to prosperitypub.com/AOP and you can join automated options right now. You can sneak in before our class. It's only $1,250, guys. So it's literally the same price that I target on an average weekly trade inside the system. And obviously then we get up to, 50 more opportunities from automated options every single time it triggers over the course of the week. Okay. So let me kind of give you the core idea behind this in about 5 minutes flat. And then you can jump in if you want, get in before our class or not. It's up to you. So everyone knows the problem with options is that they usually lose. Okay, the Chicago Mercantile Exchange says 76.5% of the time, which means if you want to trade regular options, basically good luck. You have to get the timing exactly right. You have to get a bigger move than even the market is anticipating, all that good stuff. And in the environments where we're getting these shakeups and shakedowns, it's even more difficult than ever. And that's why most people struggle, right? Because they get, like we were just talking about, they get on a roll, making some money, market spills out, and then they lose all those gains. But with automated options, what we do is we hijack the options. We twist the options where we can target income regardless of if the market goes up, down, or sideways. Whether it finishes 2 weeks from now, up, down, or sideways, we have a chance to make money. And instead of losing 76% of the time, we win over 70% of the time. And all we need is a small move in the market, around 1% or more during the trade over a 2-week period. So think about that. Instead of predicting exactly where the market's going to go, we give a trade a 2-week window. And if the market moves up at any point in that 2 weeks, we aim to hit that target automatically. So it can go up, down, sideways. But as long as we get that jump in the market, we're going to hit our target just like we have the last couple of weeks, padding my account with another $2,500. And that's really what makes automated options, in my opinion, unlike anything else. I mean, look at some of these charts. They look ugly, but we get that move and we cash out. Here's one from March. Looks ugly. You're sick of holding the trade. Balances up. You get your target. So that's really how this trade is designed to work, is to take advantage of the 2-week period. The testing on this is phenomenal. The live trading is phenomenal. I mean, I can't really say anything more than that I put my money behind it every single week because I believe in this trade so much. And so I hope that you guys will jump in there, prosperitypub.com/AOP. Join me for our live trade session. It's literally just about 10 minutes away. We'll spend a couple minutes there doing Q&A, kind of covering where the market's at, and then we would jump right into the live trade. And if you guys are not super comfortable with spreads yet, not super comfortable with how to set up those automated exits and all of that, I mean, automated options is the program for you because it's easy, it's mechanical. We do it once a week. I have masterclass in there. I take my time. I walk you through it all. So, I mean, heck, in my mind, automated options is worth the price of admission just so you get in and kind of learn how these trades work and get comfortable with spreads and automated targets and all that good stuff. I think it's worth it just for that. Of course, I am biased. It is my program. I have a vested interest in you joining, but still, nonetheless, hope you guys will jump in there. My risk on these is $2,500 a week. So every week I put in about $2,500 into the automated option, set up a target right around 1250, and look to get that rolling week over week over week. And it's really consistent and mechanical, which is why I love automated options so much, and really why I built most of my other strategies around this same exact core concept that we use. Jennifer, I agree. Jennifer says if you want to make serious money in the market, you got to learn spreads. I agree. I think it's critical. It changes the risk-reward dynamic so dramatically, puts you in the driver's seat to take advantage of how you want to manipulate the market. So I am with you 100%. All right. Any other questions about AOP? We got about 8 minutes to get you guys shoved in the door here, and make sure that you take full advantage of it before our next alert goes out. So I'll hang out for another couple minutes. Okay, Thomas. Yeah, fair enough. Well, I'd love to have you in there. Thanks for joining today and being here in the session. Hopefully this is valuable for everyone. I really do, guys. I really do try to pack the sessions, the time that we get together, with as much value as possible. So I will take your feedback. If it's not valuable, if I'm confusing, if I go too fast and you'd rather cover less ground and take longer to get through stuff, all that is fine. I want it to be as valuable for you as possible. John, yeah. So the coin trade is kind of a jump trade, but it's like a weekend jump trade, which typically we wouldn't do in jump trades. We'll normally get in like Tuesday through Thursday, and so I just started again trying to make these sessions as valuable as I could, doing a free weekend bonus trade in as many of these free sessions as I could, just to try to add on the value because I want you guys not only to learn, not only to get some analysis, but I'd love for you to make some money as you learn. That would be my ultimate goal, that you say, hey, Nate, just, showing up or joining your services. I haven't learned everything yet, but I'm making money while I learn, by following the trades. That's obviously my goal. And, I'm hoping to do that as much as I can. Okay. I will hang tight for 2 more minutes here. Then I got to drop, spend a minute getting ready for our class. And then we'll be trading live here in about 7 minutes. Yeah, that's a good point. So the spread's not going to gain a ton of value early in the trade unless you get a really big move. The nice thing about automated options, and kind of one of the hacks about automated options that most people don't realize, is that the market is already factoring in a bullish bias. So for example, let's say you have a trade where you have a line in the sand right here, right? So the market is here. All right, bear with my ugly drawing. Okay, but you have the market's here and you put in a trade. And then the market gradually goes up and it's up about, 1%. Now, to your point, spreads aren't going to gain a ton of value early in the trade. However, if you're trading the SPY or the QQQ or the indexes like we do, what you have to understand is that the market is already factoring in a bullish bias. So if the market gets up here above your key level, it actually is going to factor in an extra chunk of value on that spread, which is going to help you hit your target earlier because of the bullish bias baked into the value of that trade. So it's kind of a sneaky thing about automated options that most people don't realize, is that the bullish bias itself actually helps pay for our winning trades. Thank you, John. Thank you, Howard. Appreciate you guys. Appreciate the feedback. Always wonderful to hear. You guys are awesome. I need the feedback because for me, Sometimes I sit here feeling like I'm talking to myself for an hour, and so it's always good. Okay, there's real humans on the other side. They're hearing me. It's good, it's bad, or otherwise. So always appreciate you guys using the chat. So someone asked about the $2 target. Jared asked about the $2 target for coin. For me, I like to use those kind of middle ground targets because of exactly this reason. The market will price in enough that we can get our target, kind of cheat our way to our target earlier in the trade versus really waiting and have to predict it. So, for example, on a $2.50 spread, Jared, if you went for a $2.30 target, the market's going to need to wait to the end of the trade and essentially be convinced that the market's going to finish there before it hits your target. Just by cheating it down to $2, the market's going to pay you off a lot more easily. Yes, Sam Brown, I see your chat. I can see you there in the chat. Oh, Jared. Jared's not in here. I'll let Jared know that apparently the alert says that the session is Friday, February 13th, but there is no Friday, February 13th. Thank you. Penny, I will update. I'll have them update it. Jeremy, yeah, definitely paper trade the spreads until you're totally comfortable with them. You understand how the risk reward dynamics work, all that good stuff. Samir, I might have missed your original chat there. I saw your second chat that said waiting for response, but I think I missed the initial one. Bill, I do not use stop losses. I actually hate stop losses. I know it's a controversial point of view here, but the reason I hate them is the same reason I love targets. I don't want that level just sitting out there in the market waiting to take me out, making it too easy on the market for volatility to snap me out of the trade. Where at the same time, I love my target sitting out there, letting volatility take the target the whole way along this. So yeah, love that. Yes. Okay. I do have to jump off, but real quick, the exit trade for coin. What you're doing is you're creating a closing order as soon as you're filled. So in this case, on Thinkorswim, right click, create closing order. That's going to be a sell. So whether it's Robinhood or E-Trade or Tastyworks, whatever broker you're on, you are creating a closing order right from the start. The difference is instead of closing it for what it's worth now, you are setting a limit for a future price. In this case, $2 of credit and then a good till cancel trade. So the easiest way, if you're not familiar with it, literally just YouTube it. How to set up a closing order on a debit spread for your broker. So for E-Trade, Thinkorswim, Robinhood, and just learn how to set that closing order and then just set it for a $2 credit, and that will now sit in your brokerage. Okay, let me post that trade one more time in the chat, and then I'm going to jump off and get ready for our automated option trade. Appreciate you guys being in here today and looking forward to seeing you in the automated option session here just in a couple minutes. Bye, everyone. Have a great weekend. Happy Valentine's Day.